Good afternoon, and thank you for attending today's webinar, Client Needs, an LTC Plan. We're going to be going through annuity options for asset-based long-term care, one in particular that has a very unique spin on it here, an opportunity to pick up what's starting to become a growing need as far as those who are interested or need to offset the risk of long-term care in their plan. Before we get started here, I'm going to point out a couple items for those of you on the call that may be new or taking a look at IAMS for the first time, as well as those who are writing business with us and have been with us for years. Appreciate your attendance as well. I'm going to highlight a couple items, and then we'll transition over to David Hall, who's going to be speaking from EquiTrust about a rather unique opportunity as it relates to covering long-term care risk. So as we get moving here, thank you for joining. First off and foremost, if you are joining us new, I want to go ahead and just start off. I've never was told any different, but starting off with a little money in your pocket, if you will. For those of you that are existing agents with us, you're well aware of our marketing reimbursement program here at IAMS, where for every dime of premium that you write in indexed annuity business and target life insurance premium, you receive money for marketing reimbursement that can be used for your practice. This program is focusing on those that are just joining. So in addition to those that are on the call, for those that are just joining and in your first 180 days with us at IAMS, or maybe you haven't started it yet and you're considering it, we have a program set up to jumpstart your production with us. One of the, just laying it out, one of the challenges that we have run into in the industry that we're in is it's difficult to, oftentimes it takes a little bit longer to get that relationship going once you do partner with an advisor and with an IMO, because you don't know exactly their process. Maybe you're still testing it out, maybe you're jumping in and your staff needs to be aligned. So this is an opportunity to get that done sooner, and we're going to incentivize you with some money for your practice. So during your first 180 days with us, we're writing on the screen here, you can see different levels, $100,000 in annuity premium or $10,000 in target life premium. You're going to receive, if that is written through us in the first 180 days of your joining us, receive one of the following: a 1,500-piece postcard mailing, maybe even one on asset-based long-term care, or an iPad, or a choice of $750 in cash sent straight to your doorstep, or our pre-formatted email and marketing analysis corporate identity package, which is highlighting and building your brand, as well as pre-formatted emails to be able to send to your existing clients, all the way through the $750 to $1 million levels, which will go up into preset annuity appointment programs, 8,000-piece mailing drop. Those of us that are existing producers and have our own, say, seminar program, or are interested in one, that's also something that we can allocate dollars towards when you hit the different levels to make sure we help offset some of those expenses here in the first year as we're all out there marketing in this first quarter in the new year of 2023. So if you have a question about the new producer program, where you stand, what day of your licensing with us, et cetera, or even just the dollar amounts, reach out to your primary resource here at IAMS, your marketer or sales director, or myself, life or annuities, and we'd be happy to help and get you some more information on that. For referrals, many of us here in the room, many of you in the room here may have referred individuals to us here. I know I see some folks that were referred to us as well, and we have a referral program set up for you. So we appreciate the referrals, and oftentimes are told we don't want cash return, but we're going to give it to you anyway. The way it works is when you provide a name or an introduction to us here at IAMS, myself, my team will take care of the licensing process and onboard that producer in the same fashion that you were that led to you referring them to us, and with updates along the way. And we'll pay you a $50 one-time cash bonus when that advisor or agent licenses. So when they turn in their first contracts, that'll come to you immediately. And then beyond that, the sky's the limit. Thousands, it says here, when your referral writes additional business. So when they write business, we're going to pay you out quarterly in the following fashion, in the form of basis point percentages. So for indexed annuities, it's 0.20% as an example on anything that advisor writes, you're going to receive. That does not come out of their pocket. It does not come out of your pocket, nor are they in a hierarchical situation where they're underneath your hierarchy and you're liable for them, for that individual, or tied to them or whatsoever. Instead, it comes out of our pocket, and that's an appreciation for how we partner together and how we build our business. So if you have questions or if you have someone to refer to us, we'd be happy to discuss that and get you set up. Talk to your primary resource here or myself, and we'd be happy to explore going forward. And then, of course, the marketing reimbursement program that both the referred producer and yourself receive. You can see here for annuities, for those of you that are licensed with us, we pay a $100 marketing reimbursement per $100,000 in premium, indexed annuity premium. Unfortunately, the multi-year guarantee and the immediate annuity companies, with the commissions and overrides being lower, it's just not something that can partake. However, the $100,000 in an index premium per $100, single premium life, for those of us that are writing single premium life contracts, $200 per $100,000 in premium. And for target life insurance, it's $200 per $10,000 in target premium that you receive, and a mixture of all those going forward. So if you have a question about your marketing reimbursement account, talk to your primary connection here at IMES, and we can assist you with reimbursing for that as well. Once you do come on board with us, a lot of support here in our back office. We're known for those that are referred to us and the agents that are with us for our exemplary service. I myself have worked in multiple IMOs over my 22-year career here in the FMO or IMO industry. And, I was amazed myself that day one, even our partner, our president, Steve, was answering the phone. So 2 advisors. And at the end of the day, we strive for what we call a 2-ring guarantee. When you call in to IMES, it is a little different. We do not have voicemail set up, and that's for you. You get a live caller to be able to assist or get the person to call you back that you're calling in for, and we strive to answer the phone within 2 rings as we move forward. In addition to that, our new back office support really encompasses everything from advanced case design assistance to include advanced cases when it comes to estate planning, taxation. I myself have, and we have a legal team and advanced markets team on retainer that we can bring into a call if we have detailed questions that go beyond the general understanding on a case, all the way through premium finance, a simple annuity income analysis and design for shopping income riders, taking a look at product comparisons on replacements and long-term care planning, as well as all the way through processing and getting you processing that business, following up on 1035 exchanges so you and your staff don't have to rely on just the insurance company, especially with some of their service times right now. We have a whole entire team that handles that side of the business as well, all the way through getting you paid and the commissions that come to you. We are a consultative sales agency, meaning our direct contact as primary relationship managers with you here on the sales team is typically in the collaboration mode. What we're looking to do is help grow your business, find out what works for you, and partner resources that we've already acquired into your practice that you can utilize so we can grow together. And if we don't have those resources, go out and get them for you. Those are some things that we cover. We also have a paperless contracting and e-application system we'll talk about here next. We are partners with Firelight. Our annuity business, with the exception of a couple life companies, primarily uses Firelight. Firelight is an online electronic annuity application or insurance application system. Bottom line is, get you paid faster with limited or reduced error-free submissions to the insurance carrier. I've seen cash cases pay in a little under or right at 24 hours. This is definitely the route to go in the new world, the new normal, if you will, when it comes to the application kits rising. I don't think we broke quite 100 pages yet, but we're probably getting close with some of the paperwork. Firelight allows you to, kind of like TurboTax, go through the process, and anything that, most things that you may retype or have to retype on a paper application get mirrored. So it reduces your workload, your effort, and and we'd be happy to help. If you haven't signed up for Firelight, you can do so on our website and request it, and also talk with your marketer if you would like a walk through that program. In addition to Firelight, we also, for life insurance, use iGo. That's also on our website, and that is for the submission of life insurance in a similar manner, just a different program through iPipeline. Both iGo and Firelight, we're continually adding additional carriers as we partner with new carriers in the industry. Currently, we have 2, and I'm sure there's more of limited distribution products that are offered through IAMS and a handful, very small handful of IMOs, and those carriers are available on Firelight as well. When it comes to providing the community with a better understanding of how valuable your resources are, as a business owner, it can be difficult to oftentimes handle every hat, and our creative marketing team is here to help polish your brand, assist you with anything to get the word out in the community that you are a solutionist and that we can get clients your way. They do everything. They're, first of all, in-house team. We don't outsource this. These are employees on our dollar line, on our payroll, pay their benefits packages, et cetera. We do that for a reason, and that is, again, for our advisors and for you. One, it keeps their knowledge base focused particularly or strictly on the financial services field, and particularly the end of the channel that we're in, so that they are constantly on top of our industry, which you don't see at typical local advertising firms necessarily, because they may not, you may be the only financial professional that they've dealt with in months or at all. Our team does that daily, and they're comprised of everything from graphic design artists all the way through the most talented digital specialists and social media specialists out there. The work that you do, that we do for your practice, is also not exclusively owned by IAMS. In other words, that is your work. If we do design, logo, image package for you, we don't own the rights of those, nor do we want to. And that is a little different than a typical local advertising agency in many cases as well, because they have ownership rights in a lot of cases to your material. Meaning if an idea works with you and a competitor comes in the door, they may leverage some of those concepts with them. That's not meant to scare any of us, but it's something to ease you at walking away from a large bill from that advertising team. If you have any questions, or if you have interest in leveraging the marketing solutions team, let your primary contact at IAMS know, and we'd be happy to get you an introduction and see what we can do to help. Oh, I will go back on this as well. For those of you that just don't know kind of where to start, or those that know they would benefit from a complete analysis of their current marketing and their current practice as it relates to marketing and advertising and promotions, we also will set up a time with you, if you talk to your primary consultant or resource here, to do a marketing analysis where we'll take a review of all your current assets and material, direction, and give you an evaluation from our creative team as to areas that you may suggest or that we suggest may be an improve, something that other producers are utilizing or that you could benefit from as well. So ask for a marketing analysis today with your primary contact if that's something you have interest in. On our website, we do have the service here, the 2-ring guarantee. We are available when you call, but if you're more of a website person, and or if it's after hours and we're not available, or Saturday or Sunday, you can actually reach majority of resources that would be valuable on our website directly. One, you can do your Firelight applications and iGo applications, submit directly on the website. You can request contracting. You can also pull the majority of service, in-force, and new business forms from most all carriers off of our website. So if you had a client that you wanted to turn in the income rider distribution form for, say, a company XYZ, maybe EquiTrust, you could do so by pulling that form off of our website if we happen to not be in the office and you need it. In addition to that, we have sales resources on our website, one of which is a service that allows you to, like Google, search documents and educational pieces, as well as full-on PowerPoint presentations on topics in our industry for clients. It's all client approved. So even a topic of long-term care, the difference between standalone traditional long-term care, 7702B compliant income riders or benefits, as well as just additional liquidity riders, All that can be located on our website and also customized to your practice. I was just on there a moment ago typing in some estate planning questions and got a couple documents that I could leverage, and I know we've got those out there as well. So take a look at our website, give us a call if you have any questions. And for those of you here in the room, as we circle back around here before we get over to David and the topic today, for those in the room who have interest in picking up the additional wallet share and relationship retention opportunities with your clients and have been considering looking at taking your Series 65, becoming an investment advisory representative underneath an RIA. For those that have interest in that with a annuity-friendly or insurance-friendly firm, we do have our corporate RIA, Himes Wealth Management, and we'd be happy to set up a consultation with Duncan and the rest of the team over here. Again, annuity-focused team, from what I hear here, arguably lower fees than others if you are already currently with a team and looking at making a switch. Or maybe you're a registered investment advisor at this point that would like to reduce the compliance costs and step underneath an RIA as an investment advisory rep. We can help. We can take care of you. If you have questions about what's involved taking your Series 65, we also can help in that arena. As we've done so before, and we can help you with everything from opening up your U10 all the way through the study materials and also transitioning accounts and starting to work with you ahead of time with accounts that you may have, existing clients, partnering with Himes Wealth Management even before you test. So give us a call today if you have a question or an interest in Himes Wealth Management. We have brought back our face-to-face training courses in full force. Our first of which course is coming up here in April, partnering with insurance company Athene. And these are our 2-day producer training courses. Go through sales ideas, strategies from 4 top advisors, indexed annuities unraveled as one of the sections, going through threats and upcoming trends in the annuity industry, large life case marketing opportunities and case studies discussed, business insurance topics, income riders analyzed, full round training in a company of producers like yourself that are actively doing business out there, top of the tier in the industry. These have opened up. If you have interest in getting on the list to see if you qualify or getting on the waiting list or the list for the next event, reach out to us at 800-255-5055 or talk to your primary contact and we can get you set up. You can register right from our website. Speaking of in-face or in-person events, we've got our top producer incentive trip, Seaside Sanctuary, coming up next year in 2024. It's hard to palate that we're already upon 2024, but we are. That's occurring in April of next year. And we're currently in the middle of the qualification period for that. One thing that is different than a lot of our competitors or organizations like us is our length of qualification. The qualification period here at Himes to qualify for the Seaside Sanctuary is an 18-month-long period, not 12 months. That started back in July 1st of last year and goes through December 31st at the end of this year, 2023. So writing business now, you're in the qualification window for that, allowing even new advisors jumping on board with us to submit business and have it count. Qualification on average, 4.5 million points, dollar for dollar on premiums. So $4.5 million in annuities as an example, annuity premium during that 18-month qualification period, or a mixture of target life and annuities to get to the 4.5. We look at target life premium in tenths. So that 4.5 million would be 450,000 in target premium. So a mixture between the target and the annuities, we can get you there. If you have any questions of where you stand or have interest or have questions in general, let us know. Talk to your primary contact here or give us a direct call. So before we get on to the next portion of it here, the meat of the artichoke, I want to introduce David Hall. And before I do so, the topic we're talking about today is one that I am hearing about more and more. I'd be interested as we go around and follow up with each one of you. I'm hearing the same thing on the street. We're hearing more interest and less concern, fear, or avoidance as it relates to the topic of long-term care and covering long-term care needs. And I venture to say that a lot of that has to do, or one part of it, is we have a transition going on right now. Generation X and is transitioning wealth with our baby boomer population. That being said, many of those in the Generation X, like myself, are in the middle of possibly having decisions with their family, as I am, helping their parents transition, like I am with my father, to a skilled care facility, and in the middle of understanding the intricacies and the stuff that you couldn't plan for. You know, the situation where mom's doing well and dad's going to need skilled care. Can they be in the same room? In many cases, depending on your community, maybe not. You know, these things come up, but you're having this topic come up more and more. With that being said, we have a large amount of non-qualified annuities in force out there, or unutilized sums of money that could be protected or maybe meant to be protected for transfer to the next generation. And what we're going to talk about today is a solution that allows us to get the best of both worlds, protect one and get the long-term care coverage we need. Cost of care is going through the roof, and we've got just the person to talk to us. One thing in particular I would mention as well, I do our standalone, myself and Beth Rickliff's work here at IAMS doing our standalone long-term care insurance, as well as I do annuities. And one challenge we run into on the underwriting part when it comes to declinations or someone that's declined, long-term care is underwritten differently, as many of you know, than life insurance. And one challenge I've run into recently is something as simple as, or as common rather, as diabetes can be an immediate decline with long-term care standalone coverage when it comes to underwriting versus, say, life insurance. Many of you are maybe already aware of that. What we're going to be talking about today is a solution in which we can get our clients coverage even without health complications, even if they have health complications. So I'm really excited to hear further from you, David. And are you on with us? Can you hear?
Yes, sir. I am here, Justin. Absolutely. Excited to be on the call.
Excellent, man. Well, I really appreciate the opportunity here. We're seeing a lot of traffic around the EquiTrust Bridge product, and I'm going to unveil and I'm going to switch this over and let you take over the presentation here in 1 second. I'm going to change it over and we'll get David's screen on here.
Perfect.
Excellent. Okay. We can see you.
All righty. Let me get this blown up to the full size of the screen and we'll be ready to go.
Perfect.
Okay. So, yes, thanks so much, Justin, and thank you to everybody on the call today. Again, my name is David Hall. I'm one of the internal wholesalers here. Really excited to be on the call. And, you know, we've got EquiTrust is a great partnership with IAMS, and they do so much for us and for their agent base. So it's really a great opportunity to kind of be all on the call together to talk about something that's definitely unique in this, you know, fixed annuity marketplace. You know, we know that we haven't really become the first, you know, carrier to launch, you know, a fixed annuity type of a product with a, you know, with a long-term care type of a benefit. But the whole thought process when we launched this product was, first of all, we wanted to come up with a unique name. So we came up with Bridge, I think, and I'll explain why here in just a couple minutes. But secondly, we kind of wanted to really take a step back, look at what was out there in the industry and the marketplace as a whole, and really kind of determine how we could be better and how we could actually be different. And so actually at the beginning here, I'll go through and kind of talk about just some selling points behind the Bridge product and kind of the thought process on how we arrived at some of the primary selling points. And as Justin mentioned, one of the biggest selling points within the Bridge product is the guaranteed approval side of things when you look at the long-term care perspective. So, I mean, yes, given this is a fixed annuity product, it will go through the standard traditional, you know, suitability review process, but knowing that you have that guaranteed approval for that long-term care benefit is really what makes this Bridge product so attractive. So as we kind of go through, just wanted to kind of outline a quick agenda for everybody here. You know, first we just kind of wanted to be able to address the problem. What I've talked about where we're going to be different. Got some bullet pointed items out there for you that I'll share with you. We do have a wellness program that's part of the Bridge product, which is very unique. And the wellness program, I'll explain more in detail here in just a little bit. But what that does is it allows what I refer to as the client the ability to be able to age in place, like meaning they can set certain goals. Maybe they've got sleep apnea that they want to be able to address. Maybe they want to exercise on a more regular basis. And by doing so and participating in the wellness program, it actually adds on additional dollars or credits to their long-term care benefit base. We'll cover the product details, product positioning, which we've got some ideas out there for you, and then just some basic licensing and training type items to cover at the very end. So why bridge? And this is really going to, again, outline where EquiTrust is different. First and foremost, this is on a fixed indexed annuity chassis at the end of the day. So you're always going to have a fixed indexed annuity contract or policy regardless. So the client's always going to have that accumulation value. And the great thing about this bridge product on that fixed index annuity chassis, on the accumulation value side, is some really, really strong index crediting options, including a really strong fixed account bucket that you can allocate money into to really help be able to grow that accumulation value on an annual basis. This is a flexible premium design type of a product, so the client could, if they wanted to, be able to add additional money to the contract. Simplified underwriting with guaranteed approval. As I mentioned, this is probably one of the biggest sticking points. The underwriting process itself is simplified, meaning we're not going through any MIB, prescription drug searches, and of course it is that guaranteed approval component so that no client's ever going to get declined. We do have that wellness program, which is very unique. One thing that I really kind of like that I talk so much about with regards to bridge is the fact that it's an indemnity claim process, which simply means we're not asking for copies of receipts or anything along those lines. So once the client is actually qualified for the long-term care benefit itself, yes, they'll have to go through an annual recertification to continue to receive those benefits, but we're going to continue to pay out that money over the next 60 months. And we don't care what the client's actually going to use those benefits or use that money for that they're receiving. They can use that for whatever they want to. Customized LTC benefit. We phrase it as one size fits none. What we simply mean is the client's not necessarily putting in $100,000 and we're going to double or triple their benefit amount. What'll happen is instead, based on the client's age and their underwriting class, you and your client will have the ability to put together what we phrase as like a customizable coverage ratio. And I'll go through some examples here with you in a little bit that kind of shows some sample coverage ratios based upon age and underwriting class. So it's great that if you've got a client maybe or a prospect, for example, who needs or likes the idea and wants to be able to get as much long-term care benefit coverage as they possibly can get based upon their age, you absolutely can maximize that coverage ratio. If you've got a client on the other hand, maybe they just want to meet middle of the road and just have some long-term care coverage, you could kind of dial down that coverage ratio. Charge structure, very simple and very straightforward, very transparent on that. And then this is completely a digital process. Anything from the scheduling the underwriting, conducting the underwriting, submission of the new business via the e-application platform, that is all done completely digital through our Bridge microsite, which you can easily access just through our standard EquiTrust agent website. So here's kind of how, I think this will explain a little bit more on how we came to the name Bridge. Basically, the whole thought process on Bridge is we want to be able to bridge the gap between long-term care coverage, the ability to grow and protect assets, of course, with your fixed indexed annuity contract, and then that Never Stop Wellness program that I mentioned, which allows the client the ability to age in place. You kind of put those three components together. That's how the Bridge product really came to be. So what we've done, what EquiTrust has done, is we've actually partnered with a group called Assured Allies. Assured Allies is the group that actually administers the Never Stop Wellness program. The great thing about it, too, is they're also the group that actually does the simplified underwriting process. And so, to me, I think it's kind of nice to be able to have Assured Allies being able to do both the Never Stop Wellness program as well as the underwriting process itself, rather than having to go through two different companies to be able to do that. And for those not familiar with Assured Allies, they're basically a data technology and science company. We have a great relationship with them. And so kind of being able to hang our hats on working so closely with Assured Allies to bring this Never Stop Wellness program and the simplified underwriting process to the forefront is really what's driven so much business that came in the door so far on this Bridge product. A little bit more about the wellness program and really the benefits on the wellness-focused lifestyle. And just think about it, as an individual or a client continues to age, the growing need for some or any type of a long-term care coverage is obviously going to continue to grow. And if you think about it, so many clients, as they're getting older, they want to be able to stay at home for as long as they possibly can, really avoid having to go into that facility if or ever. And so that's what the whole meaning of this Never Stop Wellness program is extend independence, being able to live at home, even independently, for an example, for as long as the client possibly can, delay or shorten or even avoid long-term care, empower people to manage health outcomes, meaning allowing the client to really sit in that driver's seat and to be able to determine what phases of their life from a lifestyle perspective, certain things that maybe they've got from a health perspective that maybe they want to be able to adapt and do better at. Slow down and shift the age trajectory, and then reduce the risk of age-related decline. Those are kind of the pieces with regards to the wellness-focused lifestyle that we've put into place. So here is probably one of the most informative slides in the entire presentation that we get so many questions on, is this whole, how does this LTC coverage ratio work? And you can see it's basically a range for each underwriting class according to age and underwriting class. And we've got 3 different examples there. So you have your 3 different underwriting classes. Secure, that's your low end. That is meant to be able to catch any and all, everything. Standard, which is going to be your middle of the road, and then preferred, which is going to be the higher end. Off to the right there, you have your maximum coverage ratio based upon age. And these are just examples, 55, 65, and 75. So if we just pulled one out specifically to take a quick look at it as an example, we assume that a client would fall under the standard underwriting class. They were age 65. This would allow this particular client to have a coverage ratio of anywhere from 100% of their premium up to a maximum of 190%. And again, that can be shrunk down anywhere between 100 and 190. What we're seeing the most of as far as business coming in the door so far is clients and producers are definitely wanting to maximize that coverage ratio. So for an example, and I'll go through an example here in a few minutes that kind of actually shows some true numbers according to an age and underwriting class. $100,000 premium going in today, client standard, age 65. They want to maximize their coverage ratio to 190%. That's basically going to create that starting point of $190,000 day one on the long-term care benefit-based side. So $190,000 would be the actual starting point on that LTC benefit-based side. And then that LTC benefit base will continue to grow on an annual basis. I'll cover some more details on that here in just a second, but just wanted to show you this LTC coverage ratio chart here as an example of kind of what this all looks like from a customizable perspective. So let's just drill a little bit further down into the Never Stop member journey. What can a client expect once they actually take part in the Never Stop Wellness program? And keep in mind, the Never Stop Wellness program, it is built into it'll be part of the client's policy or their contract. It costs $100 per year. The client absolutely has the ability to remove that Never Stop Wellness rider at any point in time. What we're seeing in here a lot of is, since the client receives Never Stop Wellness program credits on an every 2-year basis, maybe the client keeps this Never Stop Wellness rider on their contract for maybe the first 2 or 4 years, see how it works, see how it's working for them and the benefits that they feel that they're receiving from it. Then if at that point in time, they decide this is just not what I expected, maybe it's something I just don't want to continue to do for whatever reason, then maybe they're exploring the option to remove the Never Stop Wellness rider. So just keep in mind the flexibility on that side. But step 1, the client takes that Never Stop Wellness assessment, trying to determine where they're at and where they would like to go. They then schedule a wellness call with the ally individual themselves, and really think of this ally individual as really like a coach or a partner to help the client through this Never Stop Wellness program. Between the two, the client and the ally individual, they explore the personalized recommendations. And what do they think would be best to fit the client's needs and what they would like to be able to accomplish? Step 4, it's really kind of starting to put this into motion. We're going to build that aging map with the wellness ally. Step 5, we're going to kind of look at it on a progress basis, make progress on the aging map. Are we being able to do the things that we wanted to be able to do, not only to help get us those wellness credits that we want to be able to get on an every 2-year basis, but really just improve the ability to, age in place longer and stay at home for as long as they possibly can. And then again, lastly, that step 6, earn more coverage with ongoing participation over every 2-year cycles. So that's really kind of the member journey, specifically looking at the Never Stop Wellness program. So here's some basic product details, things I just kind of wanted to mention to you here. Issue ages on the bridge product will be 55 to 80. It will accept non-qualified money right now. One of the biggest questions we get is, okay, understand non-qualified money now. What about qualified money potentially in the future? And the answer to that question is that will be something that we will entertain doing, possibly as a secondary option with maybe on a different version of a bridge product in the future. But right now it's going to be non-qualified money only. Minimum premium is $50,000. Again, it's a flexible premium design. It does have a 10-year surrender charge schedule. There is built-in liquidity, so the client does have the 10% free withdrawals that they can access anytime after the first year. And then I had mentioned the accumulation value potential on that accumulation value side. There are 5 different index accounts plus a fixed account available, and then also you have your flexible benefit base, where you're, basically your LTC benefit base side. Here's a look at the current crediting options and what those rates look like presently. Right now, you've got a fixed account currently at 5%. You have 3 different S&P 500 options. Probably one of the ones that's being utilized the most right now is just the standard, straightforward, typical S&P 500 annual point-to-point with a cap design, which is currently at 10%. And then we do have 2 volatility control options there at the bottom. One labeled the Barclays Focus 50, and the other one is the S&P Mark 5. Again, with these being volatility control type options, they're definitely meant to take the volatility out, really kind of ride the highs out with the lows. And these are actually participation rate index crediting strategy options. Obviously, there's not necessarily a right or wrong approach when it comes to the index crediting side and how you allocate the money. As I mentioned, we're seeing the fixed account being utilized quite a bit because of that 5% fixed account rate. And then just going back to the standard typical S&P 500 annual point-to-point with a cap at 10. Just know that you do have the ability to reallocate that money on the contract anniversary. So you're not stuck in one index crediting strategy for the next 10 years. You definitely have the flexibility to move those premium dollars around on an annual basis. Riders, just to cover those quickly here. So we do have the nursing home waiver that is automatically built in, included, no additional cost. Terminal illness rider, also automatically included at no additional cost. You do have the long-term care rider. That is automatically included. The cost there is broken down. It's kind of twofold. First and foremost, there is a 1% premium load in the first year. And then there is a monthly long-term care benefit rider cost that is calculated basically off of what they refer to as the net amount at risk. That's basically going to be your difference between your coverage ratio, say 190,000 in our example, minus the premium of 100,000. So the net amount at risk would be 90,000. That would be the driving point. And then it's going to be based on the client's age and their underwriting class as far as the monthly LTC benefit rider charges go. And then lastly is that Never Stop Wellness rider, which I had mentioned is automatically included and does cost $100 per year. So that's a look at the 4 riders that are part of the bridge contract. A little bit more just about the long-term care aspect of it and basically what's automatically included with all bridge contracts. So this is a guaranteed issue. It cannot lapse. It does provide those tax-free LTC benefits. You do have the flexible coverage. So the client basically chooses their initial coverage ratio up to whatever the maximum is, kind of like what we've been talking about a few different times. We have put in inflation protection. What we mean by that is on the long-term care benefit rider side, if we think back to our example where we had somebody who was 65, who was standard, they wanted to maximize their coverage ratio up to 190%. I mentioned that their long-term care benefit base side would start out at 190,000. Well, that's then going to continue to grow. The long-term care benefit base side is going to continue to grow by 2% compounded annually for up to a 20-year deferral period or until time of claim. The 2% is simply meant to be inflation against protection. And then lastly is that ability to earn additional LTC coverage through that Never Stop Wellness program, which we've talked about a couple of different times so far. So let's dig into the LTC benefits a little bit further from an accessibility perspective. So the LTC benefit rider itself is a monthly payment stability. So it's the same amount each month. As I mentioned, it's an indemnity-based benefit, so there is no submission of receipts at all, which definitely makes it very much client-friendly along those regards. Assistance for customers to be able to achieve goals for staying at home if they desire. Think about the Never Stop Wellness program there. And then just the ability to allow the freedom to use the funds however they wish. An example that we've used several times is, let's say a client, is unable to complete, 2 out of 6 activities of daily living. They qualify for that long-term care benefit rider as far as the going on claim. We'll start sending out those distributions on a monthly basis. Let's say the client just wanted to use that to, buy a new car. Maybe they wanted to make an enhancement to their house to make it more accessible or user-friendly. What they use that for is completely up to them. And so just kind of keep those things in mind from an accessible perspective when you look specifically at the long-term care benefit rider itself. A few rider features I wanted to make sure to cover. Benefits are provided via long-term care benefit base. So at the end of the day, you basically have, as I mentioned, a fixed indexed annuity chassis. You have your accumulation value, which is basically, I always refer to as to your real money on the left-hand side of the T-chart. On the right-hand side of the T-chart, you have your long-term care benefit-based side. Benefits are always going to be based off of that long-term care benefit-based side. The client will choose their initial LTC benefit base up to the coverage ratio. And, of course, the maximum coverage ratio is based on the client's issue age and then their risk class. And the maximum year one LTC coverage is $1 million. So if you're ever out on the Bridge microsite, either running a calculator, a quick calculator illustration, or a full illustration, you definitely have the ability to kind of customize that coverage ratio so that you do not exceed, the illustration software will not allow you to exceed the $1 million coverage mark. So you can find out exactly how much premium a client can put in up to the $1 million maximum, which is really, really nice. Just a kind of a quick example here as far as the rider features go. So as I mentioned, the LTC benefit base will compound at 2% annually. It's an annual roll-up that's compounded daily. The net amount at risk, which I had mentioned earlier, it's basically simply just a difference of your long-term care benefit base minus your accumulation value. There is a 4-year vesting schedule on the net amount at risk. And basically all that means is for the first 4 years, there is a vesting schedule. And it basically follows it basically goes as 20% in the first year, 40% in the second year, 60% in year 3, and then 80% in year 4. And that's all based off of the net amount at risk. And so it just basically what that means is the longer the client has the ability to defer going on claim, especially once they get into the 5th year when they're 100% vested, that's basically where they're going to see the most benefit. But just know there is that 4-year vesting schedule within the first 4 years. And then there's a sample calculation on really kind of how they drive at what that long-term care benefit base is. So they just take the net amount at risk, they multiply it by the vesting schedule, you then add in the accumulation value, divide that by 60 months. That's your end result for the long-term care monthly benefit amount that the client's going to receive for the next 60 months. So how are the benefits accessible? So basically simple, straight, and very easy to understand. Basically to submit a claim, the client just basically has to have a doctor certification that the client cannot perform 2 out of 6 activities of daily or has severe cognitive impairment. So the long-term care benefit rider does not require the client go to a facility or assisted living facility, nursing home, anything like that at all. It's simply just the inability to complete 2 out of 6 activities of daily living. The doctor provides a plan of care and then the client must be a U.S. resident. So those are kind of your main bullet pointed items. The client will definitely need to make sure that they go through annual recertification, which is required to be able to continue to receive those long-term care benefits. And then benefits are tax-free up to the IRS maximum. A little bit about the underwriting process, what you kind of can expect. We get quite a bit of questions on this just because it's something that's a little bit newer. But again, this is completely digital from an underwriting perspective. So what you as a producer have the ability to do is you can basically go through the underwriting process or schedule that for your client at any point in time, even prior to completing or submitting the new business paperwork or the application paperwork. But remember, the LTC benefit is 100% guaranteed issue, so no client's ever going to get declined on that side of things. It is a quick turnaround time, so it's a quick decision on underwriting class, meaning once the underwriting interview has been completed with your client through Assured Allies, you as the producer will get an email back within 24 hours, generally a lot less than that, but it will basically show you or tell you which one of the 3 underwriting classes the client's going to ultimately fall under: secure, standard, or preferred. Remember, there's no medical or prescription records that come into play or that are captured at all. There are 5 application questions. I think these are key. Don't necessarily, I mean, I guess you can look at these as knockout questions, but again, it's the guaranteed issue side of things, meaning if you look at the first 3 application questions specifically, I don't have them on this slide here, but if you go through the first 3 application questions, if the client answers yes to any one of those first 3 underwriting questions, that automatically places them in a secure underwriting class. If they can actually get through those 3 underwriting questions with all no answers, then absolutely perfect. Next step would be schedule that underwriting, the digital underwriting to get done with us Secured Allies, so that the client can get that underwriting decision done. And it typically takes less than 30 minutes. Things that they're checking for during the underwriting with the client, and the best process is client can either have like a tablet or a computer with a camera so that they can actually, have a verbal visual communication with Assured Allies. Assured Allies is simply just going to want to kind of basically go through some cognitive tests with the client. They'll ask them just some simple, can you please stand up? Can you sit back down? Kind of just checking their mobility, different things like that. But it's very, very simple and straightforward from an underwriting perspective. And the thought process behind the underwriting process is it's designed to limit human bias and judgments. Meaning, what's happening is when Assured Allies is doing this underwriting interview, they're simply just more or less just taking in the details, plugging it in, and then it takes the limiting human bias out of the equation, and then the actual underwriting judgment just comes back based upon really how well the client did during the actual underwriting interview itself. So here's an example. Hopefully, I think will paint a little bit better picture from an example perspective, and then showing you some actual true numbers. So we've got an individual here. He's 65. He's retired. He's single with 3 grown children. His 3 primary objectives that he has outlined: he wants to be able to live independently for as long as possible, i.e., that Never Stop Wellness program. He wants to be able to preserve his assets, i.e., that fixed indexed annuity contract. And then he wants to be able to avoid burdening his children for assistance as he ages. So he's going to put in a premium of $250,000. He falls under the preferred underwriting class. His maximum coverage ratio based upon being age 65 is 275%. So what he's chosen to do is he's going to maximize his coverage ratio all the way up to the maximum of 275%. So we'll take the initial benefit base. That's going to basically be the $250,000 premium multiplied by the 275% coverage ratio. That'll create an initial benefit base of $687,500. That'll be the actual starting point for the benefit base itself. Here's a little bit more about his concerns and his story. So he really wants to diversify his investment portfolio, but wonder if it's enough. He's got longevity in his family. His father was 93. His 93, his mother's deceased. So he's got, you figure, a long-term horizon ahead of him. The question becomes, and the question he asked himself, can I afford LTC coverage if I need it and not lose my savings or be a burden to my family? So obviously the potential solution here, as outlined, would of course be the bridge product. You've got the fixed index annuity product, which allows the ability to diversify his portfolio. with the science-based personalized wellness program, it really allows him the ability to age in place, especially since he has longevity on his side. And then the whole long-term care rider for that long-term care coverage concern that he has. So an example of his successful aging plan with regards to the Never Stop Wellness program. Sleep health. He wants to be able to improve his sleep health. His participation is 2 hours per week. He wants to be able to address his hearing loss. He got his hearing tested, completed online screening, and he's got new hearing aids. His participation, one-time hearing aid test and being out for hearing aids. And then stress reduction. He simply just wants to live more of a stress-free life. So he's, yoga provided grounding and relaxation, perfect balance for his regular cycled workouts. He participates this in 2.5 hours per week. So this is really his successful aging plan as he's put into place with the Never Stop, with the folks at Assured Allies. So let's fast forward and we're going to look 10 years later. So after a decade of healthy living, participating in the Never Stop Wellness program, unfortunately, the client has developed an illness and is qualified for long-term care benefits. So his new benefit base, over 10 years compounded at 2% annually, is up to $838,059. He's received Never Stop Wellness credits over the last 10 years, totaling $56,891. So his total benefit base at time of claim would be the 838 plus the 56, so we're at 894,950. We simply take that number, divide it by 60, and that basically produces a monthly LTC benefit base amount of $14,916, which is going to be paid out again over the next 60 months. So I think this is a perfect example that kind of drives and shows the power of the Never Stop Wellness program, but then the ability to just, in this particular client situation, he's waited 10 years until time of claim. So he's really gotten that 2% compounded roll-up for the first 10 years of deferral, which is definitely benefiting him from, like I said, a hedge against inflation. A few key product features and benefits to cover. Remember, this is a fixed indexed annuity contract at the end of the day. So you do have the higher upside potential. Account value grows more than a traditional fixed product would. Lower charges versus an LTC life hybrid type of a product, and value if the LTC benefit is simply not used. On the flexibility category, the flexibility side of things, this again allows you and the client to be able to choose that LTC benefit level. You definitely have that first year multiple coverage after year one, dollar one. And then the Never Stop Wellness program, which I know, I've mentioned this several different times. It's just so unique to the Bridge product. Allows that client the ability to age in place and really put together a plan and program benefits that's going to aid them specifically for what they want to be able to accomplish. Of course, you have on the guarantee side that LTC benefit base is guaranteed not to lapse. It will grow at 2% compounded annually for up to a 20-year deferral period or until time of claim. And then the benefit base is not determined by the account value growth. That is one of probably the most common questions that we get, is being able to distinguish. At the end of the day, you have your accumulation value, your account value on the left-hand side of the T chart. And then on the right-hand side, you have your LTC benefit base side, which is strictly used to be able to calculate that LTC benefit base side. Remember, underwriting, no declines, simple, quick video conference to be able to get that underwriting completed. And I should mention too, with regards to underwriting, if you have a client who simply says, or they feel for whatever reason that they maybe just don't want to go through the underwriting process for whatever reason, that's perfectly fine. They can actually opt out of underwriting altogether, and it automatically places them into the secure underwriting class. So if you have a client who feels, going through the underwriting process is not worth my time, I simply just want to be able to get some LTC benefit coverage, I'm okay with the secure underwriting class. Perfect. That client can opt out of the underwriting and go right into the secure underwriting class if they'd like to be able to do so. And then just remember the charge structure. Remember, it's based upon the net amount at risk and attained age. A few sales opportunities for you here. Keep in mind, obviously, with the Bridge product, accepting only non-qualified dollars. 1035 exchanges from existing life or annuity contracts could be a very extremely attractive option. Money market, checking account, savings account, CDs, all great sources of funds. Guaranteed issue and uninsurable. We've had some producers who maybe their primary focus is annuity production, annuity business that they write. Maybe they've done some life business, or maybe they've done a little bit of LTC business. They've had some clients who have unfortunately been declined. Being able to go back to those individuals who have gotten declined for this maybe standalone LTC insurance or coverage, and actually offering and positioning this bridge product as a guaranteed issue option. Just think of it as an alternative to that traditional LTC option. And of course, annual reviews is always a great option. I say that because I'm sure many of you on the call have been in the business for many, many years, have built up a sizable book of business where you have annual reviews with clients, each year. What better time to potentially position, talk about the need for an LTC type of a benefit or a coverage with the bridge product. So again, just to kind of re-summarize everything for you here, where we're different: fixed indexed annuity chassis. It's a flexible premium product. Simplified underwriting with guaranteed approval. Nobody gets declined for that LTC side. You do have that wellness program. It is an indemnity claim process. Definitely keep in mind that customizable LTC benefit. You and your client get to determine that coverage ratio. Very simple and easy to explain charge structure. And then remember, lastly, it is a completely digital process. Licensing and training. I will tell you, we've picked up quite a few new state approvals, even just over the last couple of weeks. As a matter of fact, just Colorado approved the product today. A couple of weeks ago, we added Minnesota, Texas, and Washington. We even have Florida. We had Florida right out of the gate when we launched the product on November 15th. Obviously, a very common state that we get asked about a lot is California. Unfortunately, we don't have it approved in California quite yet, but the great thing about it is they've been very open and receptive to the product. And so hopefully at some point in time in the future, it may take a little while, we will even get it approved in California. So just keep in mind whether or not the state requires any type of a health license component to it. Some states do, some states don't, and then just check to see if there's any type of CE requirements at all that you may need to complete specific to your state. We actually have a really nice chart out on the Bridge microsite that highlights a lot of these licensing and training requirements all by state. And then, of course, just keep in mind the good old carrier-specific product training that you would need to complete prior to writing any Bridge new business. Here's the microsite. The address is listed right there towards the bottom. Feel free to check out that microsite for so much really great information. In my amount of time with EquiTrust, I've not seen us put so many resources into one product launch as we have with Bridge. So check out the microsite for all the marketing materials, the illustration software's out there. I personally like the Quick Calculator. You can just plug in a couple of basic examples and you'll actually see some LTC benefit monthly payouts just within a matter of a few seconds. Underwriting can all be scheduled and completed right on the Bridge microsite. And then all the licensing and all that detail is out there for you as well to be able to take a look at. So just keep in mind, it is a fully digital process. We did this simply because, as Justin had mentioned when he was talking about Firelight, this e-app is actually not done through Firelight. It's done through a different vendor. And the amount of electronic application business that we've seen come in our door just with all of our other types of products outside of Bridge is just absolutely taken off. So it's nice to be able to do this all via e-app, convenient video interview, and then just that quick underwriting decision, knowing that you're going to get an underwriting decision back in 24 hours or less once your client has actually gone through and completed that underwriting itself. So, Justin, my man, I am finished, my good man. I will turn it back over to you and let you take away. Yeah, you bet.
Excellent. Appreciate that, David. And, as we're going through the presentation, I'm thinking, you've got generational wealth, one of the largest transfers of wealth ever coming up amongst us. You need a bridge, one way to bridge the relationship to that next generation. If there are representatives out there that are looking to do that, I know I've talked to several. This could be a great starting point. Particularly, you mentioned on annual and quarterly reviews. would have helped personally as a client, my client shoes with my father as well, because these are topics that come up. And the fact that for those that want to use that never, again, it's plug and play. You don't have to use it, but the resources with Never Stop, the wellness program, I understand that also has claim assistance as part of it. Just the general questions that you may have, having this stake in the ground, leveraging an asset that they may have could just be that introduction or bridge to the next generation. Appreciate you very much spending the time today. A couple items to mention too that I would say here on the product. I want to say the compensation on this, it's priced as a nice indexed annuity in this pricing environment, which is a great time to come out with the product, being those 10% caps. But then in addition to it, the commission to the street level commission on this thing, if I recall, is 7%. Is that right, David?
Actually, it is 8%. Yeah, for street level.
8. Okay. Did that on purpose. Yeah, there we go. So 8. Yeah. Nice.
Yep. There will be a cut.
There we go.
So 55 to 75 will pay the full 8. I'm glad you mentioned it. We're even doing a commission incentive through March 31st, so it's an additional 1% on top. So it's basically the 8 plus the 1 for a total of 9 as an example. But yeah, kind of a great time to kind of look at it. Yeah.
That's perfect. So indexed annuity with or without the headache, guaranteed issue long-term care leverage and assistance, cash policy, up to 9% commission currently if we can get it in before March. If you have any questions on it, let us know. I'm going to go through a couple polling questions. David, thank you so much for your time. We'll go through these. Each one of you will see this on your screen here, but this allows myself and my team here to follow up and get you what you need as you're working throughout your workday, and we appreciate your feedback as well. I'm going to launch the first polling question you'll see as you begin to get in there and answer the polling question. This is, would you like to contract with EquiTrust? So would you like to appoint to be able to be qualified to sell or offer the bridge product? And we'll go through that one as remaining people go through. Also getting you the resources, as David mentioned, we can access those on a non-password protected site for the bridge and get you all set up with the rest of the material to be able to sell. We'll also check, for those of you that may not be aware about if you have your long-term care certificate or if your state requires it, I know mine did, we can check that for you and let you know as well. So thank you for that. I'm going to be closing the poll here and we'll go on to our next one. So next poll here, would you be interested in signing up for one of our upcoming life and annuity academies? That way, if you don't make it out to our website, if you do have interest, we can get over to you the registration link, have a conversation with you and get you on that list too, as those typically fill up rather quick. And we want to make sure that those have interest, we get you on the list as we go forward. And we can definitely do that. And of course, if you're already on the list or registered, feel free to answer yes or no on that, but no would be fine as we go. Thank you for that. And the other one, so we can prepare a separate call for those of you that may be thinking, I've already got a list here, 3 or 4 people, David, but if you have any clients in mind that you think the product right away may fit some of their needs. Obviously, we've got clients, you may need some time to think through that. We'll be looping back around with you. But if you would be interested in a design for this, let us know, and this would be where to do so. And we can reach out to you, put together I'll give you a call. We'll put together a case and get the illustration your way and discuss further detail as it affects that individual client for you. And then, of course, if you have any general questions whatsoever, we will be looping around, or reach out to me, give me a call, Justin Ford, or your primary contact here. We can get you those questions as well answered and go from there. But really appreciate everybody attending today. David, as always, thank you so much for your time, and we're going to be hearing more about this one, I am sure. I'm excited to see it and appreciate you guys. Thank you.
Likewise. Thank you, everybody. Thanks, Justin.
Welcome. Have a great afternoon, everyone. We'll be talking to you soon. You're welcome. Take care.